Hey everybody, Bargain Brother with you again. Your prize winning penny pincher here to always help you make and save money. Mostly make money. Today I'm putting the realtor cap on again, and I'm going to talk about the components that make up a good real estate investment. And I'm only really going to talk about the monetary parts today. I'm not going to talk about how to choose the right neighborhood and the type of property and stuff like that. For this exercise, we're going to kind of stick with traditional rental properties. So we're talking about apartment buildings, whether it's 2 units. Where I come from, we call it a 2-flat. You may call it a duplex, or you might call a 3-unit a triplex. But we're talking about apartment buildings from anywhere from 2 units on up to however many units, dozens or hundreds of units. But before we do, if you see value in this content, do me a favor, smash that like button, subscribe so we can keep in touch, and sharing's caring. So please share the video, and I would greatly appreciate that, and it would help the channel grow and allow me to share this information with a wider audience. Now, when it comes to real estate, full disclosure again, more than a decade as a licensed realtor, there are 3 components that make up a successful investment venture. And if it doesn't contain these 3 components, you're probably not getting the deal that you should be getting, or maybe you need to wait and just be a little bit more patient. Now, unlike a marriage, real estate deals are not till death do you part. Real estate deals are until a good time occurs for you to move on from the project and sell it. So when you're buying a real estate deal, the first component that you wanted to have is monthly cash flow. You're in real estate to make money, so you don't want to buy buildings that are not going to put money in your bank account every single month. So the first component is you want monthly cash flow, and it needs to be an acceptable number, whether you're using a cap rate to decide what type of cap rate you hit, or if you just want to have a desired number. Some investors are a little bit more simpler. They don't even bother to, use a cap rate and say, well, it's an 8% cap, it's a 10% cap. They may just say, hey, I need $1,000 a month from this 4-unit building, or this 3-unit building, or maybe even this 2-unit building, or whatever the case may be. But the first one is having money in your account from your real estate investment venture every single month. That's also known as positive cash flow. Okay, number 2, and just about every real estate deal kind of meets this criteria. You want tax benefits. So owning rental real estate can be very advantageous for you from a tax perspective. And full disclosure again, I am not a tax professional. Consult your tax professional, but I can assure you that there are many tax advantages to you owning rental real estate, from mortgage interest to property taxes that you can deduct to lots of other stuff. Once again, consult your tax professional. I am not a certified CPA or tax attorney or anything like that, but I can tell you there's lots of advantages to owning rental real estate from a tax perspective. Okay, so you got those 2. Number 3, this one could be considered the most important. You want a lump sum payout when you sell it. So if you bought a property for $500,000, but you bought at the top of the market, and maybe it cash flowed pretty well, but after 8 years, you're ready to get out of there and get something else, and you get ready to sell it. And since you bought it at such a high point in the market, and now maybe the market has drifted down some, maybe your property is only worth, say, $550,000. Well, after the expenses associated with selling the property, whether or not you use a real estate broker or not, which you may or you may not, you still may have attorney's fees. You'll probably have closing costs and other fees associated with selling that property. So even if you got the top value in that scenario that I gave of $550, if you bought it for $500, and let's say you're still carrying a $450,000 mortgage, well, it doesn't leave a whole lot of meat on the bone for you to have that big lump sum payout at the back end that allows you to go to your next project or go towards your retirement or whatever you have that capital earmarked for. So the third thing, and really I consider most important, you want to make your purchase on the front end where you have a greater probability on the back end, being when you sell it, to leave with a large lump sum payout. Okay, so those are the three components that your successful real estate investment must contain. If they do not contain that, do not buy it. Okay, so thanks for watching this video. Don't forget to subscribe, like, and share if you found value in this content. And that's pretty much it for me for now, but I will see you guys soon in the next video. Talk to you later.